So, hello everyone, this is your CA Kaushik Mukesh, and today we are going to start with one very important concept in the entire Income Tax Act, that is taxation of capital gains. With regard to the capital gains chapter, the lecture that I am going to make now will be a series of lectures will come which are relevant for CA final students for the chapter capital gains, wherein I will be covering each and every minute part of details regarding the capital gains chapter in my style, wherein complete Bare Act will be post-mortem from the beginning till the end. And very importantly, the lectures that I am going to upload now are relevant also for CA inter students. So, much knowledge if you gain on capital gains, there is no wrong. So therefore I recommend all the CA inter students also to follow up the same lecture, because syllabus is essentially the same. The hours of discussion or the depth of discussion only will change, because the sections starting from 45 ending with section 55A completely applicable also at CA inter level. So the biggest advantage of this paper taxation is heads of income except maybe 10%. Everything applicable also at inter level, but the level at which we discuss will be changing. But with regard to the chapter like capital gain, I don't wanted to do that because this chapter has enormous impact on other sections of income tax, especially when we are reading the concept like business trust. Okay, at CA final level, of course, business trust or alternate investment fund taxation of FII. When we discuss about those things, these concepts will have a significant impact. And moreover, at inter level, if you understand the concepts like a final student, it will be having a lot of grace when you do audit set articleship time. Sorry, keeping all these things aside, let me first explain what are all we are going to discuss in this segment called as capital gains. So let us go into the main part. See here, name of the chapter, capital gains. Okay, name of the chapter, capital gains. Learning objectives. This will be starting with section 45, ending with section 55A. Everything is applicable in between. There is no exemption sort of thing. Number one, these are all the learning objectives of the chapter. If one can have a clarity, for example, on the day of exam, you have seen all these concepts. Without reading anything, if you can tick mark all these things with confidence, 1000% my guarantee, 8 to 10 marks will come from capital gains at final level, also at inter level. Okay, 8 to 10 marks. In final, 8 marks question don't come directly. They will give some questions in the form of business trust. They will give some questions directly as a capital gain transaction. So effectively 8 to 10 marks you can see at final level. 8 marks, 1000% will come at inter level. So how to understand? See here. These are all the learning objectives of capital gains chapter. Let us see one by one. First, have a clarity on what is the capital gains chapter overview or scope of this chapter. Let us understand. Charging section. Okay, charging section, section 45, 1. Charging section. Meaning of capital asset, section 2 class 14 we will read. What is a capital asset? If that capital asset is transferred, then only capital gains chapter will get attracted. Negative list of capital assets. What is not a capital asset? Types of capital assets, short term, long term. Period of holding. Short term depends on the period of holding. Long term is anything other than short term. So we need to know the period of holding to know whether you held it for short term or long term. Determination of period of holding. Whenever to attract capital gains chapter, capital asset is acquired. Capital gains chapter don't get attracted. Okay, a asset is transferred, not a capital asset. Again, capital gains chapter won't get attracted. There should be capital asset, and that capital asset should be transferred. They did not use the word sell. They use the word transfer. It includes so many things inside that we will discuss when we go into the concept. Okay. So definition of the term transfer. Next, transactions are not regarded as transfers. Certain transactions, though they look like that of a transfer, they are not actually transfers. What are they? We are going to discuss there. Next one. Transaction when it is complete and effective means what? When we read charging section 45(1), we will come to know that capital gains tax will be chargeable in that previous year in which a transfer took place. In that year it will be chargeable to tax. From this, what you have to understand? Transfer in which year it happened, that year tax will be levied. So what do you mean by transfer? When you tell that today transfer is completed, okay, today transfer is effective, how can you tell? Here we are going to read that. Next one. Sorry, there is a capital asset, we transferred. Now compute the capital gain. That's the scheme of computation. Next, cost of acquisition will not be considered sometimes. Will not be. In which cases? Full value of consideration concept. Okay. Full value of consideration sometimes is taken on notional basis. We will read there. Next one. Whenever transfer time like expenditure happen, how to treat that expenditure on transfer? Treatment of expenditure of transfer. What do you mean by cost of acquisition? What do you mean by notional cost of acquisition? Next one. If you purchase an asset from someone and you sold that, okay, how to take the cost to the previous owner? That's what we are going to see here. When the cost of acquisition is not actual cost of acquisition but is the fair market value, here we will see. Cost of acquisition in case of depreciable assets. PGBPL, we will discuss this, but here I will tell the summary. Concept of cost of improvement. Concept of cost of improvement means what? Whenever you put any amount on improvement of a capital asset, okay, I constructed a building, I wanted to construct a third floor on that, on which as of now there are only 2 floors. That third floor is not a new capital asset, that's an improvement done to the existing capital asset. How to treat that, we are going to discuss here. Next one. Now starts the main concept in capital gains chapter. Conversion cases. Conversion of what into what? Capital asset into stock in trade. Next one. Capital gain at the time of conversion of firms. Extremely important concept here. Next one. Capital gains in case of non-resident. Capital gain in case of transfer of, okay. Next one. Capital gains in case of transfer of bonus shares. Next one. Capital gains in case of rights shares. In case of rights shares, 2 topics will come. Transfer of rights shares acquired. Second one, transfer of rights entitlement. Both are discussed there. Next one, capital gains vis-a-vis means in relation to liquidation. Capital gains on buyback. Capital gains on land building or both 50C. Reference to valuation officer 55. Capital gains exempt from tax 54. Full set of sections we are going to read. There are 9 exemption provisions. All those we are going to read there. Next, other related concepts. These all areas, once if you thoroughly understand, then you are done with the chapter capital gains. Okay, listen, while I am discussing the chapter capital gains, all the related TDS provisions also will be discussed. Okay, all related TDS provisions. Wherever any kind of TDS provision is getting attracted in between, one section, 194 sections will get attracted here. Here only I will cover that, such that separately we need not discuss again in TDS chapter. In TDS chapter, which concepts of TDS not covered in the heads of income, that only we will be covering there. So it will be more simple also for you when you prepare. Okay. And moreover, I always strongly believe that law has to be read with proper interconnections and linkages. Then only one can understand it. Not by going in a sequence of sections. You should go in the sequence of the logic, not by the sections. Okay. Let us now start with discussion on the chapter capital gains. See here. First one. Observation is the key. Since I am discussing completely out and out from the Bayer Act and from the ISM, my discussion will be confined to two books, ISM, Bayer Act. Analysis obviously from the Bayer Act, and if there are any extra questions given in the study material, I will take those for you to understand. Okay, first one. What is the topic one? Charging section. Section number 45.1. What do you mean by charging section? When assessee is liable to pay tax on capital gains. Simply when I say when, I am talking about the occasion. On what happening of an event, an assessee is liable to pay tax on capital gains. Okay, or under this head, when a person will be liable to pay the tax, we are going to understand by reading the charging section. See, I expect a bare minimum concentration from the student when you are reading the Bayer Act. Don't be reckless, don't be negligent when you are reading the Bayer provisions. You have to read it as it is and understand the meaning in a right way. Then only you will understand the provisions properly. Or else any other day type summary books, you will follow that. Okay? No, sir, I wanted to know concept such that even if I read study material, I should be understanding what is going on. Even if I read a full content of 700-800 pages book, I should be able to digest everything first. That digestion will start only when you start understanding the Bayer Act, not any other third party material marked with golden lines. Okay? Read Bayer Act, read ISM. Proper way of understanding the concept will come to an end with this too. Okay? Anyway, whoever prepare a question bank, resources are from ICI, undoubtedly. RTP, ICI, MTP, ICI, PYP, ICI, ISM, ICI. Then why you are reading book other than from ICI? So, I know, lengthy, you will tell. That's why what I have done is, I have put ICI before me, the book, and I summarized all the concepts in the form of tables and charts for you to understand. Okay? Out and out our discussion will be from bare provisions of law and the study material. Questions, answers we will do from the question bank directly. Okay? Let's begin our target, capital gains. Today is the day on which we are starting it. October 10th, today, I am starting it. See how many hours we will spend, quality hours we are going to spend on the chapter capital gains and completing questions and answers as well. Okay, let's begin. Start. Jai Sri Ram. Let's begin. It should be always a good. Section 45, subsection number 1. Let's read. Okay, let's put the Bayer Act before and let's read. Any profits or gains arising from transfer of a capital asset effected in the previous year shall, save as otherwise provided in sections 54, 54B, 54D, E, EA, EB, F, G, and H, be chargeable to income tax under the head capital gains and shall be deemed to be the income of the previous year in which the transfer took place. The keywords. Now it's your turn. Read the Bayer Act properly. Please read the Bayer Act properly. Again, I am telling you with a brotherly advice. This is the last time you are going to learn income tax word by word, line by line between the words. Don't miss the opportunity of learning the direct tax in a right way from the Bayer Act. Okay? If I deviate the Bayer Act, catch my collar and ask me why you are deviating Bayer Act and telling some summary. Okay? But with regard to the discussion, let's discuss from the Bayer Act. Please read it properly. Your obligation is to read. My obligation is to explain line by line, word by word. Okay. Hopefully you read the concept. Okay. Now let me explain the concept point on point basis. See here. First point number one. Let us understand the keywords that are there in the section. Any profits or gains. Okay. Profit or gain is arising. Okay. The word arising represents whether you received or not, or some other person has received, irrelevant for me. It is arising to the assessee. Going into whose hands, who received it, irrelevant for me. That's why nowhere they use the word receipt. Receipt is irrelevant for me. Whether you have taken or not, whether any generation is made of a capital, a gain, profit or loss, it is there or not, arising, that's all. Received is not the word. The word used is arising. Any profits or gains arising. Okay. Arising from what? Arising from transfer. Okay. So you transferred what? You transferred a capital asset. What is a capital asset? Capital asset as defined in section 2 clause 14. What is a transfer? Transfer as defined in section 2 clause of 47. So there are two technical terms here which we need to know the definition first to understand the charging section. What are the two words? What is a transfer? What is a capital asset? Okay. Transfer of capital asset effected. Okay. Effected. Now listen carefully. What is the significance of the term effected? For that only one learning objective itself is there. Transfer when it is complete and effective. In that segment we will discuss about it. Okay. In that segment we will discuss about it. So let us prima facie read what is the chargeability of capital gains tax. There should be profits or gains. Very good. Received or arising? Arising. Arising from what? Transfer of a capital asset. When it happened, effected in the previous year. So what will happen? Then it shall be deemed to be the income of the previous year in which the transfer took place. Means what? Previous year of chargeability is previous year of transfer. Previous year of chargeability is previous year of transfer. In which year you should charge it to capital gain? In the year in which you receive or in the year in which transfer took place? Transfer taking place is important, not the receipt actually. When you really received that gain, I don't care. I will be targeting on two important words. One, arising, not received. I will give importance to the previous year of transfer. So, previous year of transfer is there. In that transfer, gain or profit or gain is arising. That's it. Capital gain chargeability will begin, irrespective of whether you received or not. So, receipt is irrelevant. What is the relevant factor? Receipt is not the relevant factor. Transfer taking place is important. In that transfer, profit or gain should arise. Whether you received or not, irrelevant. Previous year of chargeability is not the previous year of receipt, is the previous year of transfer. Is the previous year of transfer. That's why we should know what is the effective date of transfer. What is the effective date of transfer? So the word effective in the previous year has two important things. If you know date when the transfer is effective, for example, I will give you an example now. Okay, I will give an example. Situation. You are selling me a property to me. I am buying it. You purchase for 1 crore. You are selling it to me for 2 crore. You are selling it to me for 2 crore. You purchased it 1 crore. Selling it to me for 2 crore. We both entered into agreement on 1st September. Advance paid on 10th September. Okay. Advance paid on 10th September. Full consideration balance paid on 30th September. Registration took place on 7th September. Possession handover on 14th September. Or 14th, consideration paid on 1st October. Okay, 1st October. Possession taken on 14th October. Now you tell me, what is the date of transfer? When transfer is effective? Date on which we both entered into agreement, date on which advance amount is paid, date on which balance amount is paid, date on which registration is done, date on which possession is taken. Tell what is important. Hopefully everyone listening to the lecture, in their mind, registration. Wrong, 100% wrong. I am only telling you. So to corner and counter all these things, we have to understand effected. The word effected is having a resound in capital gains chapter. Okay, so that's why what they use, any profits or gains received from illa, arising from, whether you receive or not, from the transfer of capital asset happened, they didn't use, effected they use. So when it is effective, we need to understand when we read the concept of when the transfer is said to be effective. Date on which agreement is entered, date on which advance is paid, date on which full consideration received, date on which registration is done, date on which control is given, date on which possession is taken. Which date should be taken? 6 dates I mentioned now. Which date will really give you the transfer effective is what we are going to discuss in that section. I'm not going to reveal any suspense now. We are reading charging section. When capital gains is charged is what we are going to read. Okay. Remaining we will come forward when we go into the next concepts. Let me explain the line. Any profits or gains arising from the transfer of a capital asset effected in a previous year shall, save as otherwise provided in the sections 54, 54b, like that they said, be chargeable to income tax under the head capital gains and shall be deemed to be the income of previous year. A person has 3 capital assets. How many? 3 capital assets. All the 3 capital assets, can he prepare a block and tax it to the capital gains? All the 3 capital assets are sold in the previous year. For example, I have 3 capital assets. I sold all my 3 capital assets in the previous year. Now, I wanted to treat it as a block of capital assets and I wanted to sell them. I wanted to charge tax on the entire block of capital assets. Possible? Not possible. Not possible. This is a Supreme Court case law is also there on this. This happened because of use of the words A capital asset. Independently, you should take the previous year of purchase, previous year of acquisition, and this separately you need to consider. You should not consider all in one and take a transaction of capital gains. The word used is a capital asset. Means each capital asset we need to consider separately and charge it to tax. Understood? Okay. So any profits or gains arising from the transfer of a capital asset effected in the previous year shall, save as otherwise provided in 54 to so and so section, be chargeable to income tax under the head capital gains and shall be deemed to be the income of the previous year in which the transfer took place. Okay. So we have now done only overall analysis of chargeability. So to sum up, what we learned, profits or gains are arising from what? Transfer of a capital asset. When it is effected in the previous year, okay, shall be deemed to be the income of the previous year in which transfer took place. Means actually gain was received in very next year, okay, but it was effective from the previous year itself on in which the transfer took place. So year of chargeability is not the year of receipt, it's the year of transfer. So the only question that we get is, sir, what is there to deem here? Anyway, it is really happening, that? No. You just now we discussed, na? We did not receive money. It is only profit arised. Actually, it will be received at a later date. But even then, we deem that it is the capital gain of the previous year in which a transfer took place, even though the profit actually did not realize to me, even though I did not receive actually, we are charging that to the capital gains in the year in which transfer took place. Therefore, we need to deem. And second reason, certain times we will see when we progress into the chapter, we will see there will be no capital gain, but still we will levy capital gain tax on that. What cases? We are going to see that. Suspense. We will see when we come into other parts of capital gains. Then you will only understand why it will be. Next, very important. The third one. Why I need to deem? Why I need to deem? See, I will give you one super duper example for you to understand. When land or building or both are transferred, I collected from you 100 rupees. Let's say, for example, how much? 100. I collected from you. Stamp duty value is 120. Means if you observe, it is more than 10%. Yes. This will be considered as full value of consideration. Means the sale value in a simple language. I will consider this. Really, you may sell at 100 only, but I will consider it 120. Your cost of acquisition is 101. You actually sold at 100, but the SDV is 120. I will not consider what you actually sold. I will consider what you would have got if you sold at government value 120. So in this case, really did you get any kind of capital gain? Really will you receive any kind of capital gain? No. Actually, you sold at 101. You sold at 100. You sold at 100. Stamp duty value 120. Okay. Stamp duty value 120. Okay. Now listen carefully to the point. Let's say fair market value is also 120. You sold it 100. You purchased it at 101. You sold to your very close friend at 100 lakhs only. Now, actually what happened? You purchased at 101 and sold at 100. You will be getting a loss of 1 actually. Correct? But government don't consider this. What it said? Actually, you should have sold at 120. That is your mistake of not selling at 120, but selling only at 100. But I will consider for computation of capital gains, full value of consideration as 120 under section number 50C, such that your consideration, the sale value, deemed sale value is 120, cost of acquisition is 100, capital gains is 20. Sir, I did not receive anything. You did not receive anything, but it is arising from the transfer. Okay, that is the amount that will arise. Whether you received or not, I don't know. That's why the lawmaker, for care, he has taken the word arising. He did not use the word received. He used the word arising. And in reality, there is no gain. But I am deeming that there is a gain. That's why deemed to be the income. These many aspects we need to understand from the charging section. So, solunga, what is the charging section? Any profits or gains from the transfer of a capital asset effected in the previous year shall be chargeable under the head capital gains. Okay, if it is not otherwise exempted under section 54 series of sections, okay, and shall be deemed to be the income of the previous year in which such a transfer took place. Okay, next. So from the charging section, point A, conditions of chargeability. Condition 1, there should be capital asset. Yes, capital asset as defined under section 2 clause 14. We will read. Condition 2, capital asset is transferred by the assessee. Yes, transfer is defined in section 2 clause 47. Transfer takes place during the previous year, subject to some exceptions. We will see that. Profit or gain arises as a result of such transfer. Such capital gain is not exempt under 54 to 54H. Okay. Whatever we discuss here, I also written here. Other analysis. In some cases, capital gain arises even if no transfer takes place. That's why deemed I said that is the reason. In some cases, capital gain is taxable in a year other than the year in which capital gain is transferred. That also we will see. Okay. Compensation will be received. I will tell you when we come there. Now I can't explain. I will tell you when compensation or a destruction of asset happen. At that time, small changes will come. Profit or gain arising under the head capital gain is taxable irrespective of amount. Sir, what do you mean by that? And a capital gain should be minimum 1 lakh, minimum 50,000, minimum 55,000, minimum 1 lakh 50. Like that, it is not there. 1 rupee also chargeable to capital gain. How can you tell that? He used the word any profit. Means even 1 rupee profit comes, it is taxable. Like that, word to word you have to understand. Then mistakes won't happen in exam. Profit or gain arising under the head capital gain is taxable irrespective of amount. This is due to use of the words any. Next one. Definition of capital asset. Definition of capital asset. Why we need to learn definition of capital asset? You have to learn because charging section gets attracted only if there is a transfer of capital asset. Transfer of capital asset. So what is a capital asset? Definition of capital asset is defined in section 2 class 14. Section 2 class 14 subclass B. I have to add another. Subclass C. In these two, amendment happened. Okay. Section 2 class 14 subclass B. Section 2 class 14 subclass C. In these amendments happened with effect from 1/4/26 and a May 26 exams after this is applicable. Okay. So for the Jan exams, if anyone is writing, this amendment does not apply to you. Okay. This amendment is applicable for those writing for May 26 exams and thereafter. So anyway, these lectures are made for them, for you relevant. So first let us see summary. What is the overall summary of the section 2 class 14? I will show you the Bail Act first. See the Bail Act. This is the amendment. Finance Act 2025 amendment, which effect from 1/4/26 it is applicable. I will tell you what is the amendment, logic of the amendment, everything I will tell you. First listen. Capital asset means they have given A. This is removed from 1/4/26. This is inserted. That's why what they said, the following means the next. Subclass B shall be substituted for the existing subclass B. So instead of this subclass, remove this and put this. Okay, let's see. Capital asset means A, B, C. C again amendment is there. But does not include 1, 2, 3, 4, 5, 6. This learning objectives I have given a negative list of capital assets that we are going to read there. So let us have a clarity. In the notes I have written in such a way, Bail Act I have taken, word to word, line to line I have analyzed each and every point, post-mortem literally. There is no new question that can come in examination once you complete everything in the lecture. That is subjected topic. So you should complete whatever I am discussing in the class. After that you question me, sir, why sir this question came in exam beyond what you discussed? Because I will not leave even a single case law also. Study material, like there is a case law, that also I am covering here. Okay, let's see. Summary of the Bail Act. How the section is divided? Section said two things. Capital asset means, capital asset does not include. Means what? Capital asset means A, B, C. Okay. Problem is, see, if I tell capital asset include, if I tell, then what you will understand? Includes is always a inclusive definition. Means so many things will come. The given things are only examples. Okay. Wild animals include lion, tiger, leopard. Okay. CA syllabus include accounts and taxation. What is the meaning here? The term include means I will tell what are also included, not what are only included. Means always represent only, includes represents also. Here the word used is means. Bail Act, you can observe here. Means what? Means A, means B, means B means here, this B, means C. That's it. This capital asset. Means what? For example, I will tell like this. See here. I will tell related party or relative under income tax act. Relative means I will give list: individual, spouse of individual, okay, dependent children, lineal ascendant, lineal. I will give a list. These are also included. These are the only relatives. These are the only relatives. In idila niece, nephew, all these things will not be included. Okay. So from this, what you have to understand, whenever law uses the word means, only those will come. Others you cannot add. Others you cannot add. Only those will come. Now my question is, if the section uses the word includes, then what will happen? So many things are included. Lawmaker wanted to tell, these are some examples. These are some examples. Like this I will tell. Example I am writing. I am not writing actuals. I am writing example. Some XYZ includes, okay, so many things, but does not include. Like this I gave. What do you mean by that? XYZ, some term includes, 4 points or 5 points I have given. These are also included, but in this don't include these. Like that we will understand. Generally, does not include or do not include will come when the original definition is an inclusive definition. But here, original definition is a exhaustive definition. Which definition? Exhaustive. Means what? Only those are called as capital assets. A, B, and C. But that means what? Only A, B, C are capital assets. Other things are not capital assets. When I said so clearly, why again you have to tell what is not included? You said what are only included. Then why you should have a time to tell what are not included? That's how the topic became more complicated to understand. Okay, listen carefully. See, I will tell you why they have written that way. See here. Okay, see here. Why they have said like that? Again, I am repeating what I meant to say. Capital asset means A, B, C. That's it. Answer over. Why you should tell what are not included? You anyway said only these are capital assets. Why we will read that way? Why again you are telling these are not to be included? Why I will include? As an exhaustive definition meaning itself means don't include anything other than these. That's it. I will not include anyway. Then why you are telling intentionally? That is because of section 2 clause 14 subclause A confusion created. Okay, section 2 clause 14 subclause A created a legal ambiguity. Legal confusion was created. To relieve that confusion, definition was given that way. Okay, let us understand. See, the reason is because of this one. This is the villain of this concept. Why this is a villain? See, capital asset means is exhaustive, but in that means there is a pointer. This is inclusive in nature. Akkada problem started. What is the reason? Definition overall is a means definition, but in the means a point is there na. A point is inclusive in nature. In that inclusive, these are not included. That's what they wanted to tell. Okay, I will explain in a easier way for you. See here. Capital asset means property of any kind. Property of any kind. When I say any kind, mobile, immobile, tangible, intangible, in India, outside India, everything will come. Okay, what is not coming? Every single thing will come. So property of any kind held by the assessee, whether or not connected with his business or profession. Sorry, whether or not connected with business or profession, we will discuss separately. Property of any kind. Any kind means what? It can be business purpose. It can be personal use. It can be held as a business capital asset, or for purposes of business, not for the purposes of business. Casual asset, any kind. Mobile, immobile, tangible, intangible, business purpose, casual purpose, or any other investment purpose. Anything will come. But in that, lawmaker wanted to exclude certain things. That's why but does not include came. Actually, this but does not include touches only a point. Touches only what? A point ke exclusion. A point is a inclusive definition again. Overall definition is exhaustive. Exhaustive lo 3 points. Adala first point is inclusive. In that inclusive, these are not included. That's the way you need to understand. Property. Capital asset means a property. Capital asset means a property. The word used is property. The word is used is not asset. Capital asset means an asset of any kind. Illa. Capital asset is a property of any kind. What is a property? Property means something on which you are having rights, control, management, ownership. All comes into the word property. Okay. All comes into the word property. Property of any kind. Okay. Property of any kind. In that any kind, certain kinds are not included. Any kind is inclusive. Anything will be included. But in that certain things are not included. Let's see what they are. Number one, stock in trade other than securities referred to in subclass B, we will read that. Subclass B means either amendment. Consumable stores, spare parts, etc. in a go down. Consumable stores, any work in progress, other things in the factory. Raw materials without finishing. Okay. Finishing, stock in trade. Without finishing, raw material. Consumable, going on. Indirect materials, anything. All these things. Okay. Held as a stock in trade in the business. See, logic is very simple. I have written here clearly. Anyway, I will explain first. I purchased goods worth 1 lakh. I sold them at 2 lakh. What is the gain arising? 1 lakh. It is already chargeable under section 28 PGBP. That's why not charged under the head capital gains. Understood? If something is held as a stock in trade, if something is held as a stock in trade, I repeat again, if something is held as a stock in trade or as a consumable stores or as a raw materials, in such case when he sell that, the resultant gain is already chargeable under the head business or profession if that raw material other things are held for the purposes of business or profession. Okay. My business is purchase of shares and sale of shares. Okay, purchase and sale of shares. My business say purchase and sale. That comes under the business head. Though it is a stock in trade will go to which head? Business head. I will claim lot of expenses. I will claim the incomes. Net is called as a profit. On that I will pay the tax. That is different. It's a business income for me. Provided the stock should be held as a stock in trade for me. In that case, that will get attracted. Understood the point clearly? So, any kind of stock in trade, that may be goods, that may be shares, anything. If it is a stock in trade for you, the resultant gain is chargeable under the head PGBP with the charging section number 28. Capital gains section will not get attracted. First moral of the story. So, stock in trade, consumable stores and raw material held for the purposes of business or profession. Whether you really used, I don't know. It is held for the purposes. That's it. Used for the purposes, he did not tell. Held. That's all. Purpose is for business or profession. Whether you really utilize for business or not, irrelevant. That's why he used the word held for the purposes of. Okay, not used for the purposes of. Next. Second, personal effects. That is to say, movable property. So one thing, personal effects are movable properties. We are reading included or not included. Not included we are reading. And we are reading exclusions. What is the first exclusion? Stock in trade, consumable stores, raw materials. Excluded. Next, personal effects. Personal effects. That is to say, movable property, including clothes, wearing apparel, and furniture at home, held for personal use by the assessee or any member of the family dependent on him, but excludes these things. Sir, don't put any mnemonics to remember. you will automatically remember if you understand the concept. Okay, don't resort to certain things which are cheap when it comes to reading a law. Mnemonics and other things, don't put, read it in a straight way. Be straight when you are learning it. Don't put any mnemonics. If you understand the concept, your brain tend to remember everything. You need not put any additional effort to put any mnemonics to remember the things. Okay, sir. Anyway, listen. Personal, very sorry. Personal effects is excluded from the definition of capital gain. What is a personal effect? Personal effect is a movable property. Okay, including wearing apparel and furniture. Okay, but this movable property should be held for personal use, either by the assessee himself or by dependent family member of the assessee. Okay, this is a point. So three conditions: it should be movable, it should be for personal use, and personal use of whom? Either assessee or any dependent family member of assessee. But here very important catch point is again same: held for personal use. Whether I really using it or whether I have already used is irrelevant for the department. In general, that particular asset, I purchased Louis Vuitton bag. I purchased Louis Vuitton bag. Okay, recently I went to USA 1 year back. I purchased a Louis Vuitton bag. Indian currency, it will be costing somewhere around 3.5–4 lakh. Why I bought? Question will arise. Okay, not that I have so much money. I really purchased it for the purposes of investment, because I have a plan again to go in 2026 February. Again, I will be going. At that time, if I sell that Louis Vuitton bag, okay, I will be definitely getting somewhere around 5.5–6 lakh. Because Louis Vuitton bags, once manufactured, processed, and come out, that kind of model again they don't release. I purchased the indigo color bag, unique bag. I purchased 4.5 lakh. I can sell it at 6 lakh after 2 years. When I go in 2026 and if I sell, I will get definitely 5.5–6 lakh rupees in Indian currency. From this, what is the moral of the story? Actually, that is held for investment for me, but generally held for personal use. Held for personal use means what? Bag I purchased. When I purchase, my intention may be anything, but in general, handbags, why people will purchase? For personal use. That is relevant for the department. Really, for what purposes you have purchased, no one will know your intention. No one will know your intention. But normally handbags, what they will, why anyone will buy? Personal use. That's it. It is held for personal use. Held for personal use means what? Normally bag is something which is held for personal use. Okay. Second, sir, I purchased a handbag. Never I used it. I purchased, I kept aside. That's all. I purchased for my personal use and I kept aside. Now also attracted up. I did not use it. No need. Even then it will be excluded. Reason is held for personal use, not used for personal purposes. He did not say the words personal effects, that is to say mobile property, which are used for personal purposes. Illa. They did not use the word used for personal purposes. They said held for personal use. That's all. For your personal use, is it held? Yes, sir. That's it. Section will get attracted. That personal effect is not a capital asset. Okay. So, sir, in this what will come? Immovable properties will not come. House property, other things will not come. What only will come? Movable properties, they will come. Sir, movable properties will come means shares also will come. But shares are not for use. Okay? Shares are not for use. Na? Shares never use as shares. Share is movable property, 100%, held by a person, but not for personal use, but for the purposes of making a gain or loss. Okay? Generally, I will purchase for making a gain. I may also incur a loss, but not for using it for my personal purposes. No. So it is not held for personal use. Therefore, share is not a share. Securities never called as a personal effect. So what is a personal effect? Logic of the lawmaker is very, very simple. What is the name of the chapter? Capital gain. What do you mean by capital gain? It talks of appreciation which is in capital nature. Okay. Something which have inherent capacity of appreciation. Capital gain. Capital is your investment. Capital is your investment. Without doing anything, certain things will gain value. Without doing anything, certain things gain value. Those will come under capital gains chapter. In simple language, lawmaker intention is very simple. You invested somewhere. You did not do anything. You sat happily, you slept. You woke up. Suddenly prices are rising. Okay, that's it. From that gain will come the capital gains, so they will charge. Means there is no blood and sweat in capital gains. You purchased, you sold. That's it. For appreciation, you did not put any effort. What happened? Capital gained itself. That's why the name of the chapter is capital gain. The investment capital, whatever you kept, has gained its value automatically. Capital gains will get attracted. Clear? But PG people are not like that. You have to purchase, you have to manufacture, you have to make it finished product, you have to create a finished product, you need to do selling and distribution, you need to sell at the end, you need to make profit. Effort is there, I will allow expenses. Capital gains, you did not do any effort, still gain is coming. That's why capital gains are chargeable at a higher rate on a flat tax rates. There is no concept of slab rates for capital gains. Capital gains are not chargeable at slab rates. Capital gains are taxed at separate rates in itself. Section number 111A, 112, 112A. When we come there, I will discuss about the rates of taxing the capital gains. So, capital gains, 1 rupee onwards, the tax will get affected. That's why they use the word any profit or gain. Okay. So, what is the name of the capital gain? Today you learned a new way. Na? What is the capital gain? Capital gain. Investment gained its value automatically without putting any effort is a capital gain concept. Okay. See here. I will ask you a question. I purchased iPad. Okay. Sorry. I will ask one question. After that, I will answer this. Personal effects are capital assets are not capital assets are generally not A to F. Forget about them. Normally personal effects are capital assets are not a capital asset are not a capital asset. Property of any kind is a capital asset. But in that any kind, personal effects, stock in trade, all these things will not come. In that personal effect is one amount. So personal effects are not capital assets. Very good, understandable. Means even though you sell them, capital gains section won't get attracted. What is the understanding here? There is a capital asset, yes. That capital asset is transferred, yes. Is it a personal effect, yes. You sold it, yes. It is not treated as a capital asset. Though it is a capital asset which is mobile in nature, since it is a personal effect, I will not consider it as a capital asset. Even though you sell, capital gains chapter will not get attracted. Will not get attracted. It will not get attracted. No capital gains on that. Now what ideology that we will get? Therefore, government has a soft corner. Soft corner on whom? On normal individuals, public, general public. Sir, wearing apparel means company will wear apparel. Therefore, these are mainly for the individuals. So, soft corner of the government. What is the soft corner of the government? That assessee is using for his personal purposes here. That in that also why you are charging capital gain. Leave him. Let us give a benefit. What benefit? Don't treat personal effects as a capital asset at all. Give a benefit to him such that even if we sell, it will not attract this chapter. So it is a benefit given by the government to the general individuals who are using so many assets for their personal purposes. So the benefit is given by government to the individual. Like this, you should not think. Government is much crooked when they write this section. Logic is not that. Government intention is not, yo, this person is holding an asset for personal purposes, therefore leave him. So if you leave him, no capital gain. Section A will not get attracted. Asal, what is the chargeability of capital gains under section 45(1)? Any profit or gain arising from transfer of a capital asset. So, asal capital asset illa, personal effects are not capital assets. Therefore, chargeability will not get attracted. Government of India, really you are so much caring on individuals. Like this we will understand. Like this you should not think. Government intention is not that. Government intention was very simple. The logic behind why personal effects are not treated as capital asset is favorable to the government, not favorable to you and me. Actually, government is advantageous party. Do you know why? Yeah? Listen. I purchased the iPad. That now I will tell the example. I purchased the iPad. Movable property. Held for personal use. Okay. Personal effect. Therefore, it is not a capital asset. Okay. See, I have an iPad. Held it for personal use. I call it a personal effect. Therefore, not a capital asset. Transfer will not attract capital gain. We will think in such a way that, Abba, such a nice government idea. Government wanted to protect all individuals. Abba, protect. See now, how much protection is available, you will see. Now use common sense, if any. iPad. You purchased at 1,50,000. I purchased at 1,50,000. You are my friend. I wanted to sell this iPad after 3 months. After me using it for my personal purposes, I wanted to sell to you. A new version of iPad came, I wanted to buy that. I will sell this to you. Now tell me, I will sell this at 1,50,000, yeah? More than 1,50,000, yeah? Less than 1,50,000, yeah? 99% of the cases, personally used assets or held assets can be sold only at a price lesser than acquisition price. Means what? I will sell to you at 1,10,000 only. Okay. 99. For example, I purchased a car. Mobile asset, like a car. Held for personal use. It's a personal effect. No capital asset. It's not a capital asset, no capital gain even if you sell the car. Why? If you sell the car, it becomes a second-hand car. No one will purchase a second-hand car at the price of a first-hand car because first-hand car available, na? So they don't buy like that. Therefore, always, whenever you transfer or sell any kind of personal effects, 99% of the cases, you will not get a gain, you will get a loss. Which loss? It can be short-term capital loss, it can be also long-term capital loss. If you get a short-term or long-term capital loss on this, now what you will do? You will set off against short-term or long-term capital gain depending on the set off and carry forward provisions. What set of carry forward provision says to us relating to the capital gain set off? It says that short-term capital loss can be set off against long-term and short-term gains. But long-term capital gain, capital loss can be set off only against a long-term capital gain, not against short-term capital gain. For example, I will get a short-term, I purchased at 1,50,000, sold at 1,10,000 in 3 months. I got a short-term capital loss of 40,000. Now, I got short-term capital gain of 20. That will eat away that gain now. Government won't get any tax on that gain. And long-term capital gain, another 20,000 is there. That also will be eaten away. Zero will be my capital gain. Government is losing tax on that. That's why crooked way government has thought. And they said that personal effects are not included into capital asset. Advantage is not thrown into the hands of the assessee. Advantage is taken by the government by negating the logic of set off and carry forward. This much logic is there behind bringing this particular provision into existence. Okay. See, whether government is crooked or not, shall I show you with an example? See here. Personal effects is not included into capital asset definition. Correct? Correct. So personal effects are what properties? Movable properties. Very good. Why they considered like this? Because these personal effects generally will lose value over time. They don't gain value. Sir, no, sir, you are wrong, sir. Why? See, I have a gold chain. I have a gold chain. Today, this gold chain cost is somewhere around 6 lakh. Okay. Mobile property, held for personal use, gold, diamond ring. Listen now. Now, diamond ring, gold chain, gold bracelet. What are all these three? This. Enna? What are all these? These are called as what? Personal effects. These are called as what? Personal effects. Now tell me, I purchased these things, these all things I purchased maybe 3-4 years back at half the price. Now double the price. Now I'm getting gain or not? Yes. That means jewelry automatically gain value or not? Yes. Capital gain. Your investment automatically gains value. In those cases, your investment loses value. Here, investment gain value. Therefore, jewelry will gain value. Na? That's why, again, personal effects, this is excluded. The danger government, yeah. So, jewelry is not a personal effect. Archaeological collections gain value. More carbon dating, more older, more the value. Drawings, paintings, sculptures, idols, etc. Any work of art, these all gain value. That's why, though these are movable and used for my personal purposes, it will not be treated as a personal effect. Therefore, it will be treated as a capital asset. Therefore, transfer of any of these will attract chargeable to tax under the head capital gains. That's logic. Okay. Sir, jewelry includes what? Jewelry means, you know, na? It also includes these. What? Ornaments made of gold, silver, platinum, or any other precious metal, or any alloy containing one or more of such precious metal, mix of gold, silver, etc. Whether or not containing any precious stone. Ring is there, na? It contains diamond. It is a gold ring. Even though without this diamond, it is a jewelry only. So whether or not precious stone or semi-precious stone, whether or not worked or sewed into wearing apparel, maybe stone is there, may not be there. Anything it can be. And precious and semi-precious stones. Forget about the jewelry. Gold is not there. Stones are there. Diamond is a stone. Platinum is a stone. So precious and semi-precious stone, whether or not set in any furniture, utensil, or any other article. Okay. Any other article. For example, I have a cup. Cup handle is made of gold. Handle is made of gold. Or I have a gold ornament. I have a gold ornament. Hey, listen again. Jewelry is different from gold biscuit. Gold biscuit is not a jewelry. Gold biscuit is a bullion. Gold biscuit is not a jewelry. Gold biscuit is bullion. That comes under section 69. We will discuss there. Okay. And moreover, normally if you sell the bullion, normal sections will get attracted. Personal effects like it will not come. Because no one will personally use gold biscuit. Gold biscuit converted into a jewelry will be personally used. That will become anyway capital asset. Okay. Next. So these are all the things we completed. So what is a capital asset? Capital asset means property of any kind held by the necessity, whether or not connected with the business or profession. Sir, what do you mean by whether or not connected with business or profession? What is the significance of that statement? Whether or not connected with business or profession? Listen carefully. There is a person doing his business or profession. Doing his business or profession. For the purpose of business or profession, he purchased the land for the factory. Purchased the land for factory. 2 lands. Land 1, land 2 he purchased for the purposes of constructing a factory, for the purposes of business. He purchased. Land 1 he sold. Gain came. Business income. Huh? No. Even though it is held for the purposes of business or profession, that the sale of asset resulted in a gain will be chargeable under the head capital gain only because that land is not a business asset. Simply to tell, your business is to buy and sell the land. Huh? No. Your business is some other manufacturing. For the purposes For the purposes of business, you require this capital asset. So, if building or land is held for the purposes of business or profession, even now, still it is a capital asset only. When you sell, capital gains will get attracted squarely. Understood the point clearly? So it attracts the provisions of capital gains. So, sir, when land and building will not attract capital gain for me? When means if you are a real estate person, your work is buying and selling land. At that time, land and building will not become a capital asset. It becomes a stock in trade. Stock in trade, anyway, it is excluded. Nah? That's not the point. So, property of any kind held by an assessee. What by an assessee? Held by an assessee. The word used is held. On this, lot of discussion will be there at a later stage. Later stage may not 1-2 lectures after. This is a lecture 1. I don't want to overburden you in lecture 1 itself in capital gain. Slowly, let us move on into the concept. I hope up to here everyone is comfortable. Na? So, I will sum up to here what we discussed. Cut the video number 1. Video 2, we will discuss the balance part of capital asset definition. And then we will be going into understanding the types of capital assets. Okay. So, lot of knowledge I am going to give to you. So, please be ready to take it in a proper way. Slowly, let us go. Because capital gains chapter, if you understand now, business trust, okay, real estate investment trust, so much capital gains concept will get attracted. At that time, it will be very, very easy for you to understand. Okay. See, what we discussed here. Let me sum up here. Capital asset means property. Okay. Capital asset means property of what? Any kind held by an assessee. Okay. It is any property. The words any kind represent mobile, immobile, tangible, intangible, fixed or circulating in nature. If it is a transfer of capital asset, then income is chargeable under the head capital gain only, though it is used for business or profession. Very important observation. Now I am showing you the notes of what we discussed. Okay. Next. So if it is a transfer of capital asset, then income is taxable under the head capital gain only, though it is used for business or profession. The words held means what? He is a owner. It is generally, not always. That's why I will write here. Generally, we assume that the word held means owner. Generally. But even without ownership also sometimes held can happen. We will see. Again, when I say we will see, we are not going to see after 10 lectures. So then you will forget this. Second lecture. You watch lecture now, second lecture. See, if you don't believe me, see how much notes I have written for you. Wherever possible, Bayer Act I kept, diagrams I kept for our better understanding. Held. There are, I will discuss here. I will not leave any point for you. Held, see here. Held versus legal ownership. I have written notes already. So there I will discuss, not here. I know where to discuss which point exactly. There I will discuss. Generally, held means ownership. But sometimes it may change. That's why they use the word held, not owned. Okay, not owned. If you observe, see here. See the screen once. See the screen once. Whenever you read income from house property, they use the word assessee is the owner. Okay. That's why if assessee is not the owner of house property, then income is not chargeable under the head house property. Here ownership is the criteria. Okay. So Bayer Act uses the word, Bayer Act uses the word very clearly in section 22 house property, charging section of house property chapter, owned by. Here, if really lawmaker intention is only ownership, he will use the word owned. He use the word held. Why it is used as the word held? On that, lot of case laws are also there. We will discuss very clearly in detail. Okay, this is what we discuss here. After that, we went into concept of capital asset does not include. What we discuss here? Capital asset does not include stock in trade, all these things. Na? So stock in trade, consumable stores and raw materials held for the purposes of business or profession. Then it is not a capital asset. Surplus on their transfer is chargeable under the head section 28. PGBP. Personal effects. Okay, we are reading capital asset does not include. In the one. Other two, Bare Act. So personal effect. Instead of writing Bare Act again, I pasted the Bare Act here. So it will be very easy when you read the document also. So personal effects, that is to say movable property, including wearing apparel, furniture held for the personal use, all these things. Personal effects are movable only. It includes wearing apparel and furniture. They are held for personal use by the assessee or dependent. Following, though used for the assessee, used for assessee personal purposes, cannot be regarded as capital asset. Okay, cannot be regarded as, better to avoid confusion, cannot be regarded as personal effect. Then more clarity will come. Actually, I wrote capital asset. Which capital asset? Personal effect nature la capital asset. But confusion may come when you read later na personal effect. So following, though used for assessee's personal purposes, cannot be regarded as personal effect. What are those? Jewelry, archaeological collections, all these. Reason, because they gain their value naturally. Aforesaid capital assets gain their values naturally. Gold, silver coins, okay, used for ornament for deity, a very important case law. Okay, see here. Section uses, hey, where is the Bare Act? See here. Property of any kind held by an assessee whether or not in connected to with his business or profession. Next, does not include, see here, personal effect is not included. Held for personal use by the assessee. Assessee purchased it. And that ornament is used for decoration to the deities, gods. Okay. There is one idol, deity is there, yeah, some Rama or Shiva, something. Okay. As an ornament, he is giving that silver. Now, he is not using for his personal use. Okay. The word used is held for personal use by the assessee. Held for the personal use of the assessee, they did not use. By the assessee. Assessee should use it for his personal use. It is not for his personal use. It is used as an ornament on other person. That will not get attracted because deity is not assessee. Deity is not even a dependent family member of the assessee. Like the court gave judgment. So therefore, gold and silver coins used as ornament for the deity. Used as ornament for the deity is not a personal effect. Section use the word use. Okay, they said use for the assessee. Personal use, not for the purpose of his personal use. They did not use the words purposes of his personal use. Okay, for the purpose of his personal use. No, purpose, if you use the word, in the purpose, ornaments to gods also will come, but they did not use. This was held in Maharaja Rana Hemant Singh versus CIT. Next, occasional use. Occasional use. Sir, what is occasional use? I will purchase a silk saree. Okay. Parents purchase. Silk saree. Or assessee is a lady. Purchase the silk saree. Kanchipattu saree type, extremely costly, 1 lakh rupees. She will buy, keep it in the almirah, uses only once or twice for special occasions. Okay, then will it attract a personal effect? She is not using regularly. See, point is, a saree is always meant to wear on person, correct or not? That's it. Held for personal use is the words used in the section, not personally used. Occasional usage, frequent usage, no. Even if she purchase a very good saree worth 5 lakh or 10 lakh, keep it in the almirah, still it is a personal effect only, whether really used or not, because is it held for personal use or not? That's it. It attracts the section and personal effect advantage can be taken. Some clothes are held by the assessee only for use in ceremonial occasions, though they are not used regularly or not at all used. Since it held to be used only for personal use, it is treated as a person effect. Held in two cases, CIT versus Usharani, Jayanti Lal Shah versus CIT. In both the cases, you can observe clearly on costly sarees only these case laws happened. Lady and lady. Understand? Next, car, scooter, etc. Use it for personal purposes. Treated as a personal effect. Security is not a personal effect because you are not using it for your personal use. Jewelry, is it a personal effect? No. Jewelry is not a personal effect. It includes these also. Okay. Up to here is the segment 1 discussion. Capital asset definition, one part we completed. Okay, what we completed? Section 2, class 14, subclass A, read with exclusions 1, 2. Okay, next part we are going to discuss agricultural land when not treated as a capital asset. Agricultural land when not treated as a capital asset. Don't tell all agricultural lands are not capital assets. Wrong. Only some agricultural lands are not capital assets. What are those? That we are going to discuss. On that only, I prepared diagrams as well for your understanding. If you can understand that, na, super. A doubt will not come in your life. After that, what is asset versus capital asset? So much discussion is still pending for us. That I will put it in the second part of our lecture. Okay. Now we completed charging section. Meaning of capital asset half completed. Negative list we completed. Sorry, negative list of agricultural land pending. So tomorrow's class, we are going to complete charging section meaningfully, negative list fully, types of capital asset, determination of period of holding, definition of transfer. All those we will complete. Okay, definition of transfer. Up to here we will complete. Next class we will complete another part. Like that parts we are going to complete. I will be taking good amount of time for capital gains. Okay, good amount of time. When I say good amount of time, at least 40 to 50 hours I will spend on discussion on this chapter other than doing problems. Okay, but I wanted to make you experts, genius in this area called as capital gain. That can come only once you do all the questions and all types of concepts. Okay, well, thank you very much. Meet you again in the next session. Please comment below as to how you felt about the class. Thank you.